Okay, hello everyone. Thank you for joining us at this edition of the Peru Venture Capital Conference. Today, I am in the panel Fostering Economic Development in Emerging Economies Through Venture Capital Investments. Today, we are joined by Jackie Carmel from Endeavor Catalyst, Jorge Farfan from Bamboo Capital Partners, and Christine Kenna from Ignea. My name is Maria Pia Morante. I work at Alive Ventures, and I will be in charge of moderating this panel today with all you. So welcome everyone, and thank you very much for joining us today. Before starting the conversation, I would like to introduce myself, and then I would like to ask you please to give a brief introduction about yourselves and your organizations. As I mentioned, my name is Pia Morante. I work at Alive Ventures, which stands for Acumen Latin American Ventures. We are an impact investing fund investing in Latin America. We invest in 3 sectors: in education and access to energy and agriculture, with an impact focusing in investing in companies that benefit low-income communities. So why don't we start introducing ourselves? We can start by Christine.
Okay. Thank you, Pia. It's great to be here. It's great to talk with everyone today. My name is Christine Kenna. I'm a partner at Ignea Ventures. We are a venture capital fund that is focused on investing and supporting entrepreneurs that are providing better goods and services to the emerging middle class in Latin America. So we invest in technology-driven companies that are international, perhaps entering into Latin America, or Latin American-based companies that are staying here and serving the region. We invest across sectors. Very much focused, though, on the end consumer. And so that could be that we're investing in companies that are serving the SMEs, the small businesses as well, but across sectors including fintech, edtech, SaaS companies, HR-focused companies, a lot of digital commerce as well. So great to be here.
Welcome, Christine. Jackie, we can go with you.
Thank you so much. I'm thrilled to be here as well. My name is Jackie Carmel. I'm Managing Director of Endeavor Catalyst. Endeavor Catalyst is a co-investment fund built on top of the organization Endeavor. Endeavor has been around for 25 years supporting high-impact entrepreneurs in emerging and growth markets around the world. And Endeavor Catalyst is the fund that invests in these companies.
Awesome. Thank you very much. And Jorge?
Hello, everyone. My name is Jorge Farfan. I am the director for Bamboo Capital Partners. Bamboo Capital Partners is an impact investment fund, so we have some years of experience working all over the globe. I am responsible for the Latin area, and in that part of the world, what we do is we have invested in banking, microfinance, fintech, agriculture, and also energy in this part of the world. But Bamboo has several funds and now working on a new legacy of funds to be invested over the world.
Awesome, thank you, Jorge. Well, excellent. So I think we can start with the panel. And the first question I wanted to make all of you actually was, from your perspective, what do you think is the definition of impact investing, and how you think your organizations fit within this impact investing, the spectrum of impact investing? Why don't we start with you, Christine?
Okay, great. Well, this is a very important definition, I think, to kick off all of these conversations, because like you mentioned, Pia, we all have a different sort of interpretation of what that means. Mm-hmm. And I want to just give a little history of Ignea to understand where my definition falls today. And that's because Ignea was the first impact investing fund. It was launched in 2007 in Latin America. And we were sort of really the pioneers that were setting the standard for how do you measure impact? What are all of the different metrics they could use? We were involved in establishing the first B-rated funds. We were part of all the GEARS metrics, IRIS metrics, the GEARS initiative, all of that. And we got very deep in the terminology and the ways of measuring our impact as investors. At the end of the day, you have to recognize the fact that all investments create an impact. It could be a negative impact, it could be a positive impact, but there is an impact, there is a change. And when Ignea evolved and we raised our first real venture capital fund, which is a 2016 vintage fund, we discovered that the world of impact investing, it was so difficult to define, and people really didn't understand the term. At the same time, they would think nonprofit. At the same time, they would think venture capital. And I think it really worked against us as investors. So IGNI as a fund, our purpose, our mission has been exactly the same when we first started in 2007 as what it is today, which is that we're creating a more equitable world through the investments in support of entrepreneurs that provide better goods and services to the sector of the economy that most needs it. So that still drives us every day. Yet, we believe that the best way to generate that scalable impact is by creating for-profit, wildly successful, widely scalable companies. And so that is why for us, impact is core to what we do. Yet what I define impact investing as is really the investment that is creating a positive change that has a measurable impact. And so today, when I look at what we do, I definitely consider ourselves as an impact investing fund, but I certainly don't use that term to define us. And so we focus on we try and drill down to in every investment we make, what is that core metric or that core KPI that is the definition of success and impact and change for that particular company. And so that's sort of a long-winded answer to a very important question, but that's where I come out in the spectrum.
Well, thank you, Christine, and that makes a lot of sense. What do you think, Jackie?
So I'm nodding in agreement because at Endeavor, we are super aligned, and we have approached impact in much the same way that Christine described. So by supporting for-profit companies that can scale. Our big kind of metric at Endeavor has always been to drive economic development and job creation in emerging and underserved markets around the world. And the way that we do that is by identifying, selecting, supporting, and now also investing in kind of these high impact companies that are at this inflection point. When they scale, they generate those jobs. They really have, positive impact on their local economy. And so we define impact in much the same way. And I agree, all investments are going to have an impact, whether it's positive or negative, hopefully more so positive than not. But it is something that we focus on. And for us, I think a big definition of impact investing is around intentionality. So seeking out those financial returns and also that positive social impact in a very intentional, authentic, and genuine way.
Yeah, couldn't agree more. And what do you think, Jorge?
Well, I think that many things have been said now, but what I would say is if I have to add something else here, is of course, impact investing is a focus of investments looking for some returns, but at the same time, with everything that has been said, looking for impact in the social side, in the environmental side, in the economic side of the companies, and of course in the communities, and the impact in the communities of where the companies are working and creating more jobs, more potential and development. And something that I will add, looking for some specific areas or sectors where we think that can have a potential for the community. Let's say if we talk for impact in our side, some years ago, we were talking about banking, microfinance, but now the tech side has a lot of potential to do things. And the tech side has also an important thing that is could cover many sectors, not only just one specific one. So if we have that potential to escalate, to look for a potential sector where we can create an impact, not only on the jobs and in the companies where we invest, but also in the communities where those companies are going to work, I think that is what we'll look. And of course, with financial returns.
Yeah, perfect. And Jorge, I had a question for you as well. In general, do you feel that the VC industry is shifting into more responsible practices in terms of achieving the social development goals, or at least incorporating ESG policies within their investing processes?
Yeah, that definitely. I mean, the pandemic have created, a sense of urgent, for many of the investors, and not only on the impact area, but also in general, in order keep more or to put more attention on, these kind of impact elements when every time we are making investments. So the ESG framework, of course, this is a framework on how to manage this kind of approach for the big companies and for big funds. But in our case, and especially talking about the venture capital funds that are looking forward to create some impact and getting into this space, I think that, of course, there is a momentum and there is more increased attention on how to manage these kind of things. And of course, there is now, I would say that is more attention also coming from the LPs that are looking forward to put some attention and to send some funds and to promote the investments on impact investment through our funds, let's say.
And that's very interesting that you put this into attention. I was going to ask Christine, what do you think about that from the LP's perspective? Do you actually are you seeing that they are looking to create impact beyond their financial returns when they invest? And do you think that they are more interested now in impact compared to like pre-pandemic times?
Well, I could say that it is definitely evolving. And I think the LPs have now the tools that they need and the language that they need to start asking the right questions and putting some structure around measuring what they're investing in. Okay. What I'm not yet really convinced about is that where the true motivation is coming from. Because I also see, at least from the GP side, from the fund manager side, like now all the fund managers are beginning to scramble to create the right ESG metrics or the right reporting or figuring out what the right framework is because the LPs are asking for it. And so there is an element of, I think now because it's so common to have this conversation about ESG, a lot of funds just check the box. They want to just check the box, but it's not that they're really doing any intentional change or focus, right? Or, there's so many factors now. What is ESG, right? I think it's important to really drill down on what are the most relevant ones and really what is the most relevant part of that, of what is ESG and impact for venture funds, right? Because, I sit on the ESG committee for Mexcap in Mexico, which is Association of Mexican Funds, and they're infrastructure funds, they're real estate funds, they're having real environmental impact. But when we look at, I'm primarily investing in tech companies with 15 employees, the environmental impact is much less, but the huge social impact can be enormous, right? And so we'll focus on more governance issues. So I do see there is a very positive trend that LPs are asking the right questions. Now, real sustainable change as a result of these questions, I'm not sure about yet. I'm positive, but I just don't have the evidence or the data to see it.
That's a good point. And have you seen something similar, Jackie, in your experience?
Yes, I think it's interesting. I think, what Christine started out saying where, labeling yourself as an impact investing fund was a little bit of a handicap. Before, I think some of the stigma around impact investing and kind of what that might mean for financial returns seems to have faded a bit. I think in the industry, we've long believed and kind of waited for the moment where millennials kind of come of age and come into wealth because they're going to now control investment decisions. And in general, it's a more kind of socially responsible generation. And I think we are starting to see that. It's been years and years in the making. So I think that might be a lot of the reason why we're seeing more investors who are asking these questions and who are interested. I think the other kind of interesting shift that I'm perceiving is companies just inherently wanting to have that positive impact kind of from the beginning. So it seems like impact is being incorporated on the fund side, from an investor side, from an actual company side, which is a positive and welcome change. To Christine's point, what are the motivations and, how are people kind of indexing towards impact? I feel like a lot remains to be seen. It's still early days, but I'm encouraged that, quote unquote, this stigma around impact investing and this idea that I think for the most part, people are convinced that you can make money and have a positive impact and that those things do not have to be mutually exclusive. I'm encouraged that is more and more becoming true.
Yeah, I mean, I've seen the same thing, Jackie. It's like also that it's the family offices. It's the younger generations that are coming up. And I think that's when it's genuine interest. It's not just check the box that you might get from a large pension fund or from institutional investor, but it's really when the drive of whatever resources they're managing is that they're really trying to see, where can I put my capital to make that sustainable difference? It's because they genuinely believe that this is the purpose of their capital, which is amazing.
And how important do you think, like as managers, it is like to be really engaged with a company in the post-investment in supporting because maybe they do not feel all the findings that we do when we do ESG diligence, for example. But how important do you think is receiving these post-investment support from us, like especially when we talk about early stage companies?
I'm happy to jump in on this one. I mean, it's so important. It's so important. I mean, I think also by definition, the companies that we invest in, the entrepreneurs that we invest in, they are primarily and sort of maniacally focused on solving a problem. And that's why they exist, right? So I actually think that the companies we invest in and the entrepreneurs that we're talking with are actually having an enormous impact. But because that's essential to what they're doing. I think it's a very rare entrepreneur that I find that is just out there to make a killing, is make a lot of money. Like I really don't think entrepreneurs are driven by money at all. Like they're driven by whatever is it that they're building, right? So I think they innately have that drive for impact. Now, where I think we can really help them as investors, and it's pre-investment as well. It's sort of like beginning to ask the question so they can begin to just again start putting some numbers around it, start thinking about what they want to do with it, and then if they don't yet have, I would say, the corporate governance in place, that's where we can help. Right? Because if anything in the fund, we've done this with many other entrepreneurs. We have best practices. We can put them in touch with their peers. And then post-investment, it becomes, we're a partnership in this. Impact investing, and I am going to extend it to sort of like, why is ESG important? Is that because it's not only generating higher returns, which we all know, like there are now plenty of studies that I think are just so important and relevant that you can see, more diverse management teams have better returns, better exits, better valuations, better success of fundraising, all of that. But it's also about mitigating risk, right? So it's not just sort of like this great carrot, but it's actually saying, no, as partners, as investors, we have to work on this to avoid these potential risk factors that you have. And so let us help you, right? I mean, I don't run the business. I certainly cannot replace the entrepreneur, but I certainly can help the entrepreneur, research, figure out what are the best practices, put them in touch with their peers, and those kind of things.
Right. Agree. So I would like to ask the three of you, like, if you could describe a little bit more about your sector strategy. Really, what sectors you are seeing now having the highest impact in Latin America, especially in this context, like post-pandemic. There are some sectors that has been more relevant. I would like to ask a little bit about your sector strategy. Jackie, can we start with you?
Sure. So at Endeavor Catalyst, we are sector agnostic. Because we are a rules-based fund, we invest in the companies coming out of the Endeavor portfolio that meet our criteria, which are essentially that you need to be an Endeavor entrepreneur raising a minimum of $5 million of equity capital from a qualified institutional investor. And so that makes our approach and our portfolio be sector agnostic and also kind of geography agnostic. So we have a really interesting lens at this point. We're over 180 investments in across 3 funds in 35 markets around the world. So we have a really interesting data set over the time period that we've been investing, which is about 9 years. And so we've been able to observe some really interesting trends when it comes to technology adoption in kind of the markets where we operate, so emerging and underserved markets. And what we've seen is that kind of the adoption of technology in these markets tends to go in waves. And so typically what we see as the first wave is kind of commerce. So facilitating consumers' access to goods and services, think, ride sharing, grocery delivery, things like that. And what comes really soon after is innovation in fintech, which is obviously closely tied because it, facilitates payments and the access to those products via commerce. And so we're seeing just a ton of really interesting innovation in the fintech space. I think everyone is in our markets, particularly in Latin America. We're seeing really interesting things in the Middle East. And so fintech is such, a booming industry right now because it's kind of the rails and facilitating technological disruption of so many different sectors. And it's giving people access to things that they might not have had access to before, which we think is obviously very impactful. And then from there, the next kind of, the wave that it goes along with fintech is kind of technology disrupting other traditional industries and sectors, like healthcare and education. Those are two areas in agriculture. Those are areas in our portfolio that have grown a lot. And I think the pandemic has significant tailwinds, for those sectors, which has been really great to see. And it's been amazing to see how technology has positively disrupted and impacted education, healthcare, agriculture. And then lastly, the third kind of big wave that we see is technology kind of disrupting and facilitating SMEs by digitizing a lot of their processes, whether it's, bookkeeping, marketing automation, sales strategy, et cetera. And obviously, the growth of SMEs in any of these markets, it's hugely impactful. It has a very direct impact on a country's GDP, for example. Anyway, those are the waves of innovation that we're seeing, and it's kind of a very repeatable trend that we're seeing across our markets. So,
Awesome. Thank you very much, Jorge. What do you think?
Yeah, and in our case, we kind of agree with Jackie. I mean, because especially on the fintech area, on the impact investment side, what we see is like perhaps one of the most developed things in Latin America. I mean, I'm not saying the rest of the world. But then the pandemic also put in the attention some of the e-commerce and logistic potential areas of investments. There are some interesting things in Colombia. I have seen also some things in Mexico. And apart from that, something that Jackie also mentioned about, these specific investments in, let's say, health sector. I've seen some of them coming from Brazil as well. Brazil is like one of the, it's not surprisingly, it's nothing surprising, but of course they can have more potential availability because of the market they have and the scalability they could have to try to prove and solve some situations. So we have seen some potential, let's say, experiments in Brazil, and apart from that, I will say that something that we would like to work is in the agriculture sector. But then, to be honest, it's coming like the question is like, what is your purpose in the sector that you want to attack? Because sometimes you start with a fintech company looking for a potential business on that sector, but that company engage with e-commerce or logistic, or you start with some logistic company that at the beginning start like a logistic company, but then becomes also a fintech one. Then it's like it's not necessarily now a sector. I would say like the potential for becoming a solution, a potential solution in different streams eventually when something is triggered. But I would say that those could be the sectors that we are looking forward to have some investments.
Awesome, very interesting. And what do you think in your case?
Just jumping in, one thing I'll add, and Jorge, it's such a good point. We recently had a panel with our own entrepreneurs and in a variety of sectors, but specifically focusing on commerce. And one very interesting point that they had, for example, Carlos from Kavak in Mexico, is that, and kind of we were talking about the evolution of super apps, is that in general, when some of these companies are going into a market with one very specific problem they're trying to solve, especially in many of the markets where we're operating, they're actually tasked with needing to almost vertically integrate and create all of the solutions along the way to help them actually solve the problem they originally set out to do. And I think that's just like an inherent, not problem, but an inherent thing that entrepreneurs encounter in a lot of the markets where we're operating.
Yeah, I think it's a total reality. And so, I basically just 100% agree. I loved how Jackie first laid out the landscape and the evolution of the sectors, because that totally makes sense. I look primarily at Latin America, but that is exactly what's happening here. And with Jorge, the same sectors. I think what's something interesting is a lot of entrepreneurs, when they come and talk with us, they say, oh, do you invest with competitors, or do you have, we do something similar to a company or portfolio? At the end of the day, what we're seeing is that they are all emerging. you're saying like, maybe we invested in a digital commerce platform, or we invested in a SaaS type company. But at the end of the day, they end up having to build in their own payments platform. I mean, not only because there are attractive margins there, but because they need to deal with fraud. Right? And they do it much better than anyone else can. Or it's a digital commerce platform, but that they need to vertically integrate and have actually the fleets of motos and la calle, doing the final last mile delivery themselves, right? So I think that that's sort of something to be expected as we see these companies grow and evolve and scale, get access to the capital. What I think has changed is that it's not so much, we are not in a position, I think, especially investing in Latin America, we don't yet have the size of the markets to be very deep in certain verticals. We're beginning to see some investors come in just very deep in fintech in Latin America, and that's beautiful. But at the end of the day, we are subject to the entrepreneurs that come and knock on our door, right? I'm not building the company, myself, but what I think has changed is that we're seeing the sophistication of those entrepreneurs, and those teams that they're building are coming with much more experience. And that's really encouraging. So while we can say, we're still investing in the fintech space, the fintech solutions are very, they're much more sophisticated. We typically don't see deep tech, companies or innovation or biotech coming out of Latin America. But what we're seeing is that the probability of success is much greater because these teams have that rich local, boots on the ground operating experience that are now repeat entrepreneurs, and not so much the first-time entrepreneurs that we had a few years ago.
Great. I think that was a great point. And I a little bit about that topic. Jorge, I wanted to ask you a question about impact measurement. So what are the main, first, how you define the impact framework you use when measuring the impact of the companies you are investing, and how do you help the entrepreneurs in some cases develop their own frameworks if they don't have one?
Yeah, I mean, I would say that there are a lot of theory behind this. If you can look on that. What we try to do is perhaps two things. Of course, to have a theory of change. I mean, depending on the sector and the company, but try to do it simple. I mean, to be honest. I mean, because you can get into too many details on that. And you can put so many KPIs that perhaps they are not realistic for the company or for the sector, or just to be honest, for the time of the entrepreneur, because as I think Christine made a big statement about them, they have many, they are very enthusiastic about doing things, and they are very occupied doing many things. And every time we charge with something else, we have to be very careful on what we are asking them to do. But on the other side, we want to do it, and we want to help them to grow into that space. So the KPIs, first of all, we define the theory of change. We try to see what is about, what is our intention in investing in this kind of sector and company in Latin America. There is not any specific theory of change depending on this theory is going to be the same thing for this company and for the other company. We try to analyze and to review what is the best theory of change that we can analyze and provide when investing in this company. Once we have done that, we set up some basic KPIs. Again, they are not the same thing for all investments and not for all the companies. We try to really see what are the most important ones to each of the companies. We don't try to put hundreds of KPIs because then they are not going to be manageable. But where we try to be more involved is in the under post and post transaction. Let's say how to follow up and what they have to do in order to get these goals. And this is not only about creating the KPIs, because I think that and then I agree with Christine as well, because part of the job is to create a corporate governance structure in the company. On how to create a corporate governance. I mean, you are talking with entrepreneurs, with startups that sometimes they want to be focused on the business side, and sometimes they don't have the time to focus on some other things like a good corporate governance, a good board member structure, shareholder structure, some committees, audit, risk committee, or the asset liability committee, whatever they have to be in place. So and you cannot focus sometimes cannot focus from point A without corporate governance to point B to create an impact without creating this kind of corporate governance, actually supporting the company to create this corporate governance, because you are not creating from zero. Actually, you are supporting the entrepreneur to create this corporate governance. And under the creation of that assumption of that corporate governance, then it comes also different things, including the impact side of the story, right? So I would say that it's a mix, but we take care to be in line and match with the corporate governance of the company, and be in the same space.
Christine, and in your case, is it similar, or do you have a different approach?
It's very similar, and I think it starts with the entrepreneur. It starts with the company, and working with them to understand what is their best focus of impact and the theory of change. Again, it's not just measuring, how many women do you have on your team or whatever, but really what is or how many loans are you given, but really what is that outcome and that change that we hope to see throughout the life of this investment. And then it goes down to making sure that this is something core and essential to KPI that the founder and the team, they're already measuring. It's aligned with the success of the business. And then it's something that we can easily track and be in alignment with. And so the intention is we need to be able to inspect what we expect. And so we have to measure it. And that's important, but it's not too onerous of a job that it cannot be done, or it becomes a chore that they have to do, for their investor. This has to, again, be driven by the founding team themselves.
Exactly. And that adds value to them. And I have, my next question can be a little bit controversial, and I wanted to ask all of you your opinion. So it was like, from the entrepreneur perspective, do you think that having this impact lens should start from the beginning of the business, or is it something that can be acquired throughout time? Maybe Jackie, we can start with you.
Sure. I think it's so tough to answer, and I think it depends. But I think it goes back to impact being kind of very genuine and intentional and authentic and kind of core to the business. I think what Christine mentioned earlier, and I think what Jorge did too, is that what's really inspiring is when entrepreneurs, they're so obsessed with the problem they're trying to solve, and just inherent in that problem, the company's financial success is tied to the problem they're trying to solve, which also has a positive impact, right? So if you're an ed tech company, the way that you're going to make money is by reaching more people and educating more people, which has a positive social impact, right? You're educating more people. And so I think more and more kind of when companies are just so completely aligned, their financial success and their positive social impact, kind of success and growth, are so correlated. I think it's super interesting. And so in that case, you do start from the beginning. I think positive business practices are obviously, I think, a win-win for everybody. And I think focusing on kind of ESG or impact from the beginning can help you attract and retain more talent, can help you attract investors, can help you your kind of reputation and your public perception. So I think there's a lot of pros. I'd be interested in hearing others' perspectives, as long as it's not distracting to the company. But I feel like if it's core, it can be put in place from the beginning.
And Jorge, what do you think?
Well, I think that everything has not to be in place from the very beginning. I mean, sometimes, what we really want to be focused is on, of course, in the company and the thesis of the company, but of course, in the people who's going to manage the company, and to really understand if they are doing the business under an ethical way, taking care of people. And in addition to everything that is under the commercial side, the finance side of the company. So, and sometimes what we realize is that they are doing very good things, but perhaps they don't have that specific name, for impact investing. They have a product. They call a product. They call the company. They call the processes. They mention. They tell you in a very passionate way, but they not necessarily relate that to any specific impact investing thesis, and they don't have to do it, by the way. But But what we think sometimes is we have a match, because they actually at the end they are doing something very interesting on the impact investment side. Perhaps they don't have the specific name to doing that, but we believe in that. We believe, and they believe that after we can join the company, we can work together in enforcing that theory, or actually growing that to any other market region. This is what we have. And of course, there are others that are more direct, and they have everything from the start. You know, they have constructed this kind of theory framework, and is more like ready to understand the concept from both parts. So I would say we can work on both sides. It depends on who is who, and if the manager and the entrepreneur believes in that.
That's very important and very interesting.
You know, I mean, I'm just going to say that first, recognizing the fact that being an entrepreneur, starting a company, is the most difficult job. It is the hardest job to do well. And so I'm going to say we're focusing on the highest potential entrepreneurs to have the greatest success and actually be long-term success. And all of those entrepreneurs I have found are impact-driven first, because they're so focused on their mission and purpose and reason to be there. And that is what gives them that superpower to be that Pied Piper of drawing those first employees who work for nothing, convincing investors, you know, building this aura around their vision. And that's what works. And so I think that impact is innate in that individual group of individuals that is starting that vision in that company. And then the terms, the metrics, the formats, the structures can be built in and layered on top of whatever that impact, vision, mission is. And so I really don't think you cannot teach someone to believe this, because it is something that's just medular, it's core to that individual, but we can help structure it. And I think, I have various examples of entrepreneurs, founding teams I've worked with in my portfolio who I would say were non-believers, let's just say, of certain things like diversity. Diversity is it's a very easy one to focus on because it's so visible. Not just gender, but race, socioeconomic levels, all of that. And you see it happen with, typically startups start fast, and they start with a group of people that they know and they trust. And so this one particular case, there are 5 entrepreneurs that were all engineers from the same school. And they were all men, literally cookie cutter, awesome, amazing guys. But as they kept scaling with the same, prototype of a successful employee. And so when we started saying, hey guys, you're now at the level where you're going to start building out your C-suite, I could suggest as a board member that you start looking for my diverse and different profiles, right? And they're like, no, we hire for the best. Like, we're not going to put that as a criteria. I'm like, okay, here are all the data, here are all the articles, here are all the information, I think you should take this seriously. They ended up doing this full search. They ended up hiring the best, most phenomenal CFO, happened to be one of the most diverse individuals. You could put every label on her about how she checks all the diversity boxes. Totally non-intentionally, though, chosen for her skill. Once they made that one hire, it was just a domino effect for the rest of their company and the rest of the C-suite, right? And so now they come back and they're like, we are the believers, right? And so they were the ones that were the most against it. They became the most for it, having lived it themselves. So I think it's our job to continue to sell those stories, to promote them, and so that the extra effort that is required, because it is an effort to put in those structures to make change and to deal with that sort of improved diversity or impact metrics, whatever it is very much worth the effort, but it's not easy.
That's very interesting. Very interesting. And in your experience, have you seen like companies in the opposite way, like companies that do not have an impact mission, or they do not believe at least in the impact mission, and they're trying like to raise capital, and they kind of force that impact when they pitch?
Yes, and they fail. It's very transparent. I think, Jackie, something you said about your mission is looking for people who are really authentic and genuine. Right. And so I think thankfully at the stage where we invest, we have the opportunities to really get to know the entrepreneurs still. Right. And so I think as you get to be much larger and scale businesses and everything, I think it's a whole different issue. And I think you can sort of fake it a little bit. But at this stage, I think it's just very transparent. And so those companies we will not invest in.
Okay. That makes sense. And this is my last question for you guys. Considering like the current context of countries here in Latin America, do you think governments and the civil society in general should incentivize impact investing in our home countries? And if it's possible, any of you can share examples of initiatives that you have seen that really foster impact investing and it's supported by public or civil society organizations? I don't know if anyone can jump to this question.
Yeah, I can start perhaps. It's very interesting because there has, I mean, there are many things that can be done on a partnership, right, between the private sector, investors, regulation, the government, and of course, many of them they are going in the direction to create a very strong ecosystem, to foster the potential opportunities for local companies. But in addition to that, one of the things that Bamboo has been working in the past during the last 2 years, in the creation of investments under a blended finance approach, these kind of things where you identify a very potential opportunity to invest under the impact investing arena in any specific country or region. But then you realize that it is a very risky investment. But this is at the end an impact investing thesis, right? So there are some catalytic opportunities for governments, to invest in these kind of things to create markets, and a way to do that is to co-create that with the impact investors through blended finance approaches, where the government or some or these organizations can put some money together with other private investors organizations, and they can co-create the opportunity to let's say fund something and then be catalytic and waiting for that to happen, and others to come after and put some money and to really see that this is growing into a specific sector or area where somebody wants to invest to create impact. It's not easy, but it's something that we are working on some other areas in the world, in Africa and Asia, and it's creating some results. And we're happy to do that. But of course, in Latin America, perhaps this is something that the governments can start. We are more focused on the product side of the investment, even coming from the government point of view. That is quite good, and actually, it's something that it should have to be done. But in the other side, perhaps to complement these kind of efforts under a blended finance approach can be something that can help to support the impact investment area, specifically when we talk about the risky areas or the risky potential opportunities to invest.
Christine, do you have any other example, or Jackie?
Well, I think I have various different examples, and I can sort of start with by saying I think there's an enormous opportunity for governments to have a positive influence in creating the capital markets that are needed to support entrepreneurship and the development of investors in funds. I think in an ideal world, the government would be the first check-in. I mean, they would be able to take the most amount of risk, given the structure, to create these incentives to build these ecosystems, right? I think, however, I am a big cynic of any sort of government program because I've not seen them ever implemented well, particularly in Latin America, particularly in Mexico. There are so many layers of complexity, and there's so many opportunities for those programs to go wrong that they end up hurting the sector at the end of the day. I think even just from the beginning of the fact that the type of individual that would be working in the government managing these programs has a very different type of DNA than that individual that is used to working in the entrepreneurial ecosystem and is sort of trained and has a different set of incentives entirely than the government employee. So I am, my response to you is I don't expect anything from local governments. I think they have an enormous opportunity, but I'm not waiting around for any of those government programs to kick into place. Right. So, I mean, that's sort of, it's sort of unfortunate reality, but that's where I see it is. And I think where they can help though, is especially on the fiscal side. Sort of, can they put the incentives in place to bring more capital to the region, to motivate more entrepreneurs and investors to put their money towards innovation and technology and high growth businesses. And I think that's where they can be really successful towards attracting the talent and the capital that is needed to really be a catalyst for creating this positive side.
And have you seen that in Mexico, like those kind of initiatives?
Absolutely not.
No.
I would say we talk a lot with the government, and especially through different organizations. There's a lot of dialogue with previous administrations, much more so than this administration. But that exactly is the problem. Administrations change, agendas change. You know, we're building companies for the long term, right? And so if they're going to thrive, they have to thrive despite whatever administration and despite whatever discounts they're getting or incentives or grants or whatever. And so again, like, I think we need to operate within the regulatory environment, but understanding that in Latin American companies are very resilient, and that is a huge strength, right? And so again, expect nothing from the government, and just quickly figure out how you work with them so that you are within the regulatory requirements, especially in fintechs and whatnot. But you need to then depend on your own, on yourself and your investors and everyone in your own community to really thrive.
Right. And Jackie, from your experience, have you seen something different?
No, very similar. I agree with the previous comments. And at Endeavor, you know, we've always been big believers in the power of the private sector and not relying on governments, just based on, you know, what we've seen over the years. And so, you know, we continue to focus on the private sector, and we've seen a lot of change catalyzed via the private sector. And obviously government support is helpful. But as Christine said, you know, these entrepreneurs are resilient. They've figured out how to operate in these environments. You know, I don't think that we should or can expect anything from these governments necessarily, but if they do take steps towards further supporting impact investing, or just investing in general in venture capital, as was mentioned previously, that would be a huge plus. But I think luckily the private markets are really playing out, and it's exciting to see.
That's great. Well, thank you, everyone. Thank you for our panelists here for this great, amazing conversation. So now we will see a fireside chat called the VC Opportunity in Latin America. So keep connected, and we'll see you soon. Thank you very much.
Thank you, Pia.
Thank you, Pia.
Thank you, Pia. Thank you, everyone.
Ian and Jorge.
Thank you.
Bye.